This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history. There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Hello, friends, and welcome to this week's IG Live. And we will talk about this stunning reversal that we have seen in crypto prices. So again and again, the volatility that we've seen this year has been proven to be, as I've been saying, almost like a broken record, just a wonderful, wonderful buying opportunity. And that's really what we're going to talk about today. It's really about having the mental framework in order to rewire your brain in how you view volatility. And I wrote an article exactly about this today that you can access at tawariresearchgroup.com. I wrote an article today specifically about how to lean into volatility in a way that works for you rather than against you. Okay, so let's talk about where we were just last week and where we are right now. Remember, what I've been saying is that the volatility has not been a worry to me or a scare to me because of where we are in the cycle. So one of the things that I want to harp on today is you invest, and it doesn't just have to be with crypto, it can be with equities, it can really be with just about any asset, real estate. You have to look at where you are in the cycle. Everything moves in a cycle. So prices don't just go straight up, period, and they don't go up forever. They go up for a cycle, they go down for a cycle, they go sideways for a cycle, and then they go up for a cycle. And those cycles are long, especially in the stock market. So what I want to talk to you about, of course, here we talk about crypto. The crypto cycles have been fairly predictable for the last 15 years. Generally, you have a pre-bull market before the halving, and then you have a lot of volatility after the halving, and then you have a massive bull run, generally 6 months to 9 months post halving. And that has happened again and again and again, and I believe that will happen not only this time, but it will happen at a far larger scale. And the reason why I believe that is because the inroads into this asset, the inroads, let's call them the highways of capital, are much larger than they were before. When I first got into crypto, there was no highway that capital could take to get into crypto. It was a bicycle path, right? Opening up an account with Coinbase or Kraken or Gemini, or having a relationship with an offshore broker was the only way to get in. Now we have regulated pathways, truly super highways of massive capital can travel in and out of this asset class. That capital that can use those rails, call them, ETFs, which is really a super highway of capital. The capital can use to move enormous amounts of money in and out of an asset class now that exists, which never existed before. So the next stage is, okay, what's the adoption going to be of institutions into that asset class? Now remember, institutions move slowly. It takes time to educate institutions. So this is why I believe that we will see this adoption curve, specifically of Bitcoin, just accelerate at an ever increasing level through this bull run as more participants get educated about the value of Bitcoin and the positive effects of putting a small amount of Bitcoin into a diversified portfolio. Now, on top of that, we have the Ethereum ETF that is going to be approved, I would imagine, relatively soon here based on published reports. We then have the high likelihood that President Trump is going to win the election, and he's come out very pro-crypto, which means that you'll have a greater financialization of crypto products. So what does that mean when I say that? What it means is that you will have brokerage firms, Wall Street, create equity wrappers around more crypto. So they'll create products around different cryptos, and be able to sell those products, ETFs, ETPs, whatever you want, options, to their customers, which again, it's like adding another roadway into Bitcoinville. If we look at Bitcoin as a kind of an isolated city, right, before it just had bicycle paths to get in and out of it. And now all this infrastructure, bridges, railways, roadways, tunnels are getting built to connect this town to the rest of the world. And that is going to have a wildly bullish impact on the price. You don't have to go to Wharton to know that. You don't have to have a PhD in finance to know that. You don't need a degree of any kind to figure that out. When you have an asset that's closely held, that most people don't sell, 70%, 80% of the asset hasn't moved in months, maybe 40 or 50% hasn't moved in years. There's a hard cap. A third of the coins have been lost forever. You don't need a PhD in market dynamics to understand how high Bitcoin can go. It can go exponentially higher from here. Now, on any given day, Bitcoin can drop 50%, 30%, 20%. It is the nature of the asset. Look at the Germans. They dumped $3 billion worth of Bitcoin and they look like jackasses today. They're selling at 60K, 58, 53, 54, 55. We hit 66,000 today. We're going to go to 77,000, then 87,000, then 97,000, then 100,000, then 150,000. The German government absolutely did their citizens a disservice dumping that Bitcoin. It was just dumber than two rocks in a sock. Why would you exchange something that is demonstrably rare, that cannot be printed out of thin air, for fiat currency? It's insane. It's an insane decision. Do they see it that way? No. When Bitcoin's at 100K, 200K, 300K, a million, they'll have a different perspective. The key takeaway is, at least for the balance of this year, is that you must view volatility as a gift, as an opportunity. The question is, how much more effect is Mt. Gox going to have on the price of Bitcoin? I personally, speaking completely selfishly, I hope it has a massive effect. I hope they dump their coins and I get to buy more Bitcoin at 52K, 48K, 45K. I would love it. I was buying Bitcoin all the way down. 62, 64, 60, 58, 57. I didn't get coins at 53 because I was hoping I could get coins at 52. So my point is, it doesn't matter. It doesn't even matter who wins the election, whether it's President Trump or President Biden. It doesn't matter, because what makes Bitcoin valuable has nothing to do with who's in the White House, except as it relates to the amount of deficit spending that particular president is going to engage in. And so no matter who ends up winning in November, it's a good bet. If it's President Trump, taxes will be lowered, which will increase the deficit, which will increase government spending. If it's President Biden, the chances are that we will have larger government spending, which will increase the deficit, which is wildly bullish for Bitcoin. So I'm getting questions like, do you think we will go lower this summer? I don't have a crystal ball. That doesn't even matter. Do you understand that question doesn't matter? What matters is what will you do if we go lower? And the key takeaway, hopefully, that you get is that you buy. If we go lower at any time this year, you buy. You buy the dips and sell the rips if you're a trader. If you're a longer term person, you buy the dips and you hold for what I believe will be a minimum price of 150K. So the question here, it's a good question. Is there any upside to owning BTC ETF versus actual Bitcoin? When you own physical Bitcoin, no one can take it from you. I'm assuming that you're holding it on your own wallet. What I like about holding a specific Bitcoin is that, any Bitcoin that I have on a wallet, I just don't even think about. And so I forget about it. I mean, I have Bitcoin sitting on wallet since 2016. No matter what the volatility is, I just don't care about it. One of the problems with having Bitcoin in an ETF is that it's easy to panic. It's easy because it's so easy to buy and sell. So you have to ask yourself, if you're a person prone to panic, then you're probably better off just buying Bitcoin and putting it on a wallet and sticking it in a safety deposit box and then pulling that out when Bitcoin's at 150K so you can take some profits then. But it's really up to you. You have to know your own personality. You have to know your own self. Are you a person that's easily swayed by market sentiment? And it's okay if you are. Most of us are. You just have to put in a defense against your own human proclivities. So, I look at my life and the success that I've had. It hasn't been because I have some type of supernatural abilities. It's because I've put in things in place that protect myself that make bad decisions. When you look in the mirror and you say, okay, I have a tendency to FOMO, or I have a tendency to catastrophize, or I have a tendency to take too much risk. Once you understand who you are and you take an honest appraisal without going into the K-hole of self-flagellation, which unfortunately a lot of people do, then you can start putting in strategies in place to protect yourself from the worst parts of your personality, your emotional makeup, because you might never change as a person. And that's okay. Change is really hard. But if you can recognize who you are and put in place backstops to prevent the worst parts of your decision making from playing out with your money, then you're going to get ahead. You're going to move your life more in the direction of where you want it to go. Does that make sense? Okay, so the question is, are you planning to have this kind of a live session of your service for your subscribers? Because this will be extremely valuable. It's a really good question. So yeah, this is something I would love to do for my subscribers. I have to be careful though, because this is a public forum and I operate under the publisher's exemption, where I do not give individualized personal advice, which is why when people ask me a lot of questions that I ignore in the chat, it's because they're asking for personalized investment advice, which I can't give. So that's it's kind of a tricky place. If I'm doing something like this in a private forum, does that cross that line? So that's something I got to speak to an attorney about. Question is, do I believe people and institutions are taking money out of Bitcoin and going into ETH? They might be taking some of it. Generally the way the wave works is Bitcoin has a massive move. Then there's some profit taking in Bitcoin, which goes into Ethereum. That has a massive move. And then there's profit taking in Ethereum that then goes into the altcoins. That's generally the way that it works. Okay. All right, friends, I want to thank you so much for tuning in. Please check out TawariResearchGroup.com. If you want to join my service, you can go to 500xcoin.com. Again, remember, we are going to have volatility. Nothing we can do about it. Our job is to understand what to do when volatility strikes. I've said it repeatedly. We are still in the early phase of this bull market. So volatility is your friend. If you're a trader, buy the dip, you sell the rip. We've gone from 53K to 66K. And I guess what's happening right now, you have retail traders going in there on leverage, buying Bitcoin. Where were they at 53, at 54, at 55? This is why I talk about the fundamentals behind Bitcoin so much. I have been down on Bitcoin numerous times, 50%, 80%, 70%, 65% for big money, 20, 30, 40 million dollars. That's big money for me. What has kept me in the position is that I have understood the long-term value of Bitcoin. So when you understand the long-term value of an asset, you can deal with the volatility. Now, the good news for us is that we are in the early stage of a bull market. So it's not like we're late stage, we're in big, and we're late stage, and then we have to worry about a 60% or 70% drawdown. Next year, we're going to have to worry about that, and we'll have to cut our position sizes and take profits and things like that. But we're early stage, so we don't have to worry about that. That's next year's problem. This year's problem, we got to make sure that we have enough money invested and enough money invested in the right ideas. All right, friends, that's enough out of me. I want to thank you so much for tuning in. And as I always like to say, I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatiwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.